Hi grade 12s and welcome to another video on value-added tax. So I spoke to you about what value-added tax is. I spoke to you about which goods are taxed. We spoke about standard rates, we spoke about zero-rated rates, we spoke about exempt goods. We just spoke about a lot in the first and second video, and so now I'm going to introduce you to how tax works as in for your business, and then also a few calculations. So let's get into it and look into my board. So on my board we have VAT 201 form, right? This is a form that vendors are required to complete in order to submit their VAT records to SARS, right? So sorry about my marker. So basically, like I said, you have to be registered to be regarded as a VAT vendor, right? But at the same time, it doesn't just mean you register and then something automatically happens for you. There are forms, there's a process that needs to be followed. Then in that regard, there then is VAT tax period, right? And which is just basically vendors are required to submit tax returns and make VAT payments to SARS according to the VAT tax period. So this is something you can look up or just check in your textbooks, but basically what this means is they are just as not even small business, but just as all businesses have financial periods, SARS has tax periods as well. So they collect tax in specific periods, and so there's specific times in which you can hand in your forms, there's specific times in which you can request your returns, specific times in which, or periods in which you can go and submit your tax payments. And so this information is very important to know, just for the general idea, to be able to know how the system works, to be able to know just everything around value-added tax before we just get into calculating it, right? So now let's get into some calculations, because in the next video, which is the last video, I'm just going to do a few calculations with you and just show you what you can expect sort of from value-added tax questions. So the first thing I want to explain is, when you're dealing with VAT, and like I explained before, when you're dealing with accounting in general, you must be able to read clearly, to understand and reread in a situation where you don't understand. So you have to be careful to notice what is VAT inclusive, what is VAT exclusive, and they usually put in bracket if it is inclusive or exclusive. It's very important as well to watch out for the statement. Let's say it's Tabo Ltd. You must watch out for the statement Tabo Ltd is not a registered VAT vendor, or Tabo Ltd is a registered VAT vendor. This information is going to help you know whether you need to even think about VAT, care about VAT, and also what you're dealing with in terms of while you're filling in a financial statement. Should I take out VAT? Should I add VAT? Should I calculate the value of VAT? And all of these things, very important, so that you know how to answer the question and what the question requires of you. Okay, so the first calculation is to find VAT inclusive, right? I'm going to just move that up a little bit. Okay, VAT inclusive. So to find VAT inclusive, it's the exclusive VAT amount, because they'll write VAT and then they'll be exclusive in the brackets, multiplied by 115 over 100. So basically that's 100% of the price plus 15%. So this is the VAT and this is the selling price. Then to calculate the VAT in a VAT inclusive amount, you say the price, which is inclusive of VAT, multiplied by 15 over 115. So here we just want the VAT. Then to calculate VAT exclusive, we take the inclusive VAT amount multiplied by 100 over 115. So this is our selling price without VAT, so that we can find out what is the total amount out of VAT and selling price, right? Then to calculate VAT payable and VAT receivable, at the end of most questions they will say to you, okay, regarding the information that you've just gathered and statements you've just filled in, state whether the VAT is receivable or payable. Then also state how much is receivable and how much is payable. Sometimes they will ask you for both, sometimes they'll ask you for the amount, sometimes they'll ask you for whether it is receivable or payable. So VAT payable to SARS is output VAT minus input VAT. Obviously, I explained to you output VAT is the VAT that we pay out and are going to get back into our business when we go and collect it from SARS. And then input VAT is the VAT that we get when we buy from somebody and we give them our VAT. And then it is input for us because we can go and collect it from SARS. So VAT payable to SARS, so it's payable to SARS because they collect VAT. So VAT payable to SARS is output VAT minus input VAT. And then VAT receivable is input VAT minus output VAT. So keep that in mind, and if you find that you calculate, when you're calculating payables, you get a negative amount, and it's receivables. If you're calculating receivables, you get a negative amount, then it means that it is a payable. But all of these things, like I said, common sense and also general knowledge, you should know this stuff and you must study this stuff so that you are equipped for anything that can come up. And then go over my first, second videos, and also just to be sure that you are familiar with the terms and you are more comfortable with the things that I've said. Yeah, I hope that this helps you study, and I hope that this helps you go through your questions and practice, because now you have a little bit more of the theory, or theory explained if it wasn't explained to you before. And I hope that this helped you. I hope that you are getting the knowledge that you need to pass your matric exams with flying colors. Other than that, thank you so much for watching. I really appreciate it, and I hope that you study well. Bye.